Welcome to this week's version of Nickels and Dimes, our weekly video series. Well, what a difference 1 month makes. A month ago, the average investor was freaking out about a very likely, in their opinion, slowing economy. The recession was absolutely here, and the market was going to collapse into oblivion. A month later, aka now, the market has basically recovered almost all of its losses or all of its downturn, and things are looking a little more rosy, and folks are quite optimistic. What has changed? The reality is nothing has changed. The market's just recovered and people feel better. At least that's my opinion. I know, of course, there's been some facts in terms of tariff delays, so that is helping provide some clarity. So today we're going to talk about what is possibly next for stocks if you look at history as any guide. And by the way, if you see this video on social media, on Facebook or LinkedIn, or if you get it in an email, go ahead and share it or forward it. So let's jump in and explore. So what is next for stocks? And as I mentioned, folks about a month ago were very, very concerned. Extreme fear in the marketplace. This is a fear and greed index. Essentially, it measures investor sentiment. When folks are at extreme fear, that's when you got to look at buying or potentially buying. Obviously, the market, as a result of that clarity on Trump with the tariffs, has roared higher. As Buffett always said, when folks are fearful, you need to be greedy. And when folks are greedy, you need to be fearful. Now, the stock market just had a perfect week. In fact, the S&P 500 and NASDAQ 100 both enjoyed perfect weeks, which essentially means rising every day in that 5-calendar work week. Now, perfect weeks don't happen in bear markets, or at least they haven't happened before. Now, the great news is, at least looking at history, forward returns, historically speaking, have been above average for perfect weeks. Now, let's look at some data. This is when the NASDAQ 100 and the S&P 500 both have perfect weeks, defined as a positive day for 5 straight calendar days. You could see what happens 12 months later if you look at history. 1985 to the far right column, 12 months later, the market was up 9.7%, and you could see the rest. This is absolutely phenomenal news if it continues. Again, in most cases, the market has had continued upside 6 and 12 months later. Now, this is a historical chart of the S&P over a long period of time. You can see the blue dots are the times in history where there has been a perfect week. The shaded areas are when we have had bear markets. So the point I'm trying to illustrate here is perfect weeks always happen when we have a continuation of a bull market trend. And if history is any guide, it appears we're likely going to have more upside, at least over the next 6 to 12 months. You might have seen in the news a major rating service downgraded the U.S. debt, essentially saying that the U.S. is not as credit worthy as it used to be. Now, keep in mind, when the 3 big rating agencies downgrade a sovereign index or a sector, it has proven to be an excellent contrarian indicator. You might recall last Friday afternoon, the U.S. credit was downgraded. In other words, one of the large credit agencies said, essentially, the U.S. government, you're not as solvent or as credit worthy as we thought you were, so we're going to downgrade your credit rating. The futures took a downturn, but again, at least based on the short-term week here, Monday, Tuesday, as I'm filming this video on a Tuesday, the markets have kind of shrugged off that news. So don't get too freaked out. Historically, the market doesn't necessarily care if the U.S. gets downgraded. As mentioned, Moody's was the actual rating service that downgraded the debt. It might throw a temporary wrench into stocks. It looks like, at least in the short term, that's not going to be a factor. And I want to remind you, in my opinion, no matter what the market does, you must have a few things here. Number one, what are your goals? Clarity on your goals. Again, you might say, well, what do you mean? Understand if, for example, you're still working, when you want to retire. Is it 5 years? Is it 8 years? Is it 10 years? Get clarity on what that goal is. Or if you're in retirement, what's your goal and plan in terms of your income plan, developing an investment strategy that has your focus on 3 things: your risk tolerance, understand what your risk tolerance is, Make sure you have a growth and protection strategy, because as you know, we're not always going to have good markets. We're going to eventually have a bear market, so you want to have a protection strategy. And the third thing in this investment strategy column is a family index number, meaning understand what rate of return you need to earn now and in your future years to create the life you want. So again, clarity on your goals, a plan, and what is your investment strategy. Regardless of what the market does, again, based on history, it looks like the equity markets are going to continue higher. That's great news with possibly this tariff stuff behind us. But again, don't lose focus on the priorities, which are these things as I covered. Thank you again for watching. As I mentioned, if you find value in this video, go ahead and share it on social media, or if you get it in an email, go ahead and forward it to a friend. And as I'd mentioned, if you would like a second opinion on your portfolio or financial situation, this is our website at nicholswealth.com. Click on the upper right-hand tab, this Request an Appointment tab. Fill out the information, and one of our advisors will reach out to you and answer your questions and give you some confidence in today's challenging financial environment. Thanks again for watching. Bye-bye.